Good morning, everyone. Good morning. Yeah, do I have our attention? Good morning.
Good morning. Yes, you do.
Yeah. Okay. Good morning. Yeah. Good morning. You are welcome to Equity Professional. My name is Wasiu Olonode. So I'm one of your tutor for under taxation for taxation. So I'm one of the tutor that will take you. So I'm taking you with my other colleague, which have started with us. I believe he has started since last week, Mr. Idris. So I'm also going to take some aspects of your syllabus. So be rest assured that before the end of the diet, before we close the diet, so we'll be able to do justice to all the topics that you are expected to know as far as your syllabus is concerned. But before we move further to any topic, so I'm going to give us a brief about what is expected of us from my own side, from the aspect I'm to take. So which I'm going to give us those aspects, so one after the other, so which will be a guide. We are rounding up of what any of the topics, so you'll be able to point out that okay, these are the topics that are remaining for us to tackle. So as far as your syllabus is concerned, the first thing you are expected to know, so one of the aspects of your syllabus that you have to know is what is called the basis of assessment. I hope we are writing them down. Course content, the course outline down. So the first one we have what? Basis of assessment. Basis of assessment. Then after that, we also have what? Number 2, capital allowance. Basis of assessment, capital allowance. Then the next one, we also have what is called loss relief. Loss relief. Loss relief. Loss relief. Then after that, we have what? The concept of adjusted profit. The concept of adjusted profit. Concept of adjusted profit. Concept of adjusted profit. Then we have what? Withholding tax and investment income. Withholding tax and investment income. I hope we are with me. Hello? Can I get our response?
Yes, sir, we are.
Okay. Thank you very much. Yeah, thank you. Yes. Withholding tax and investment income is also another important topic that we are going to look at as far as your syllabus is concerned. Then the next one, we have a value-added tax. Value-added tax, VAT. Value-added tax, VAT, VAT. Value-added tax. Then after value-added tax, we have professional code of conduct. Professional code of conduct and ethics. Professional code of conduct and ethics. Professional code of conduct and ethics. is also another important aspect of your syllabus. Then after that, we have custom and excise duties. 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 Then after that, we have what? Company income tax. Company income tax. Company income tax. Company income tax. So company income tax. So those are the aspects that you are expected to know as far as what the syllabus is concerned. So those are the area that we'll be looking at from my side. So please, so let us take note of that. So by the time we proceed further, so if there is anyone that we are yet to what to do justice to, please just point my attention to them. So by the time we are rounding up the syllabus. So today we'll be starting with the first one, which is what the basis of assessment. The basis of assessment. I hope we can all see my screen, Abby. I have shared the material as well. Can we see the screen?
Yes, sir.
Yeah, yes. So basis of assessment. Basis of assessment. So that is the one we are starting today, basis of assessment. So when they say basis of assessment, what are we looking at? So we are looking at the situation that a taxpayer, a situation whereby a taxpayer, so will be what? A taxpayer financial transaction, an event in a particular accounting year is subject to tax. That is the situation whereby a taxpayer financial transaction for a financial year or a particular accounting year is subject to tax. Using what? Using the appropriate tax law or tax act. So when we talk of this taxpayers are usually in two forms. Taxpayer can either be an individual taxpayer or corporate taxpayer. So as far as taxpayer is concerned, it can either be what? Individual or corporate. And being an individual or corporate, any form of taxpayer, you can either be what? Resident or non-resident. So let us take note of that. For taxpayer are in two forms. It is either you are either an individual or a company. Whether you are an individual or a company, you can either be what? Regarded as a resident taxpayer or a non-resident taxpayer. So what you are looking at under this basis of assessment is how the record of this taxpayer, whether an individual or a company, how their record for a particular year will be subject to tax using what? Using appropriate tax law. So that is what the basis of assessment is all about. So let us take note of. And under this basis of assessment, we are going to be looking at some terms. So you can see the definition in the first paragraph. So in the first sentence that is there. So which is what? Which is that? Then we are going to be looking at some terms which are very important because those terms are what is going to guide us. We are going to be using them by the time we start what? We start computation. We are going to be using those terms. So that's the reason why we need what? We need those terms to be able to what? So we're going to need those terms. That's the reason why we need them to be able to what? To guide us. So What are those terms? So the first one we have what is called accounting date. Number one, you can see there the first one, accounting date. Accounting date. Accounting date. Accounting date. Accounting date. Accounting date. So what does an accounting date mean? As the name implies, accounting date. That accounting date is what? Because every taxpayer, if you are engaging in business activity, whether as a taxpayer engaging in business activity, you can either be an individual or a company. So accounting date is now what? The date you have selected that you are going to be preparing your account in simple terms. That date that you have chosen, that you are going to be preparing your financial statement. So you as a taxpayer now, if you are a company or an individual, you can say, okay, I want every year, every 31st of December or every 31st of March is the date I want to what? Prepare my account, which is going to serve as your what? Accounting date. So in simple terms, accounting date is what? Is the date the financial statement or books of a taxpayer is prepared based on what? Accounting principle. Is the date the financial statement or the books of a taxpayer is prepared based on what? Accounting principle. So that date that you have selected that, okay, you want to prepare your account is what is called accounting date. So that is called accounting date. So that date can be any date, which is usually what? The end of what? A particular month is what? Is going to be regarded as what? Accounting date. Then after the accounting date, we have what is called what? Government tax year or fiscal year. Government tax year or fiscal year. They call it fiscal year. As that one implies, you can see this one is not talking of date. It's saying year. That's the second one. Government tax year or fiscal year. It's saying year. When they say a year, who can tell me what does a year imply? How many months do we have in a year?
12 months.
12 months. Yes, thank you. So when they say government tax year or fiscal year, that is what? A 12-month period that starts from 1st of January to 31st of December annually. Government tax year or fiscal year is what? Is a 12-month period starting from 1st of January to 31st December annually, which is what is applicable now. Before now, we usually have it from where? 1st of April to what? 31st of what? We usually have it from 1st of April to 31st of March. That was during what? Before 1980. So, but now, from 1981 downward, the government tax year or fiscal year is now from 1st of January to 31st of December annually. So it is going to be what? A 12-month period. So that is what you can call it your government tax year or fiscal year. Please let us take note of that. So that is the second term that we need to what? To consider. Then after that, the third one we have is what? Accounting year. Accounting. Look at this one too. It's talking about what? Accounting. Accounting year. It's talking about year. So this accounting year, that is the period that a taxpayer is going to what? Is going to prepare his account. Usually for what? For a 12-month period. The period that a taxpayer is going to prepare his account, which is usually for a 12-month period. So that period, the taxpayer wants to prepare his account to know whether he's making a profit or is making a loss. So the period that you, as a taxpayer, that you have now selected that, okay, I want to prepare my account, which is going to be what? A 12-month period to know whether I'm making a profit for that 12 months or I'm making a loss is what is called what? Accounting year. And by law, this accounting year is not necessarily compulsory that it has to be the same with this government's tax year or fiscal year. It is not compulsory that you, a taxpayer accounting year, must be the same with what? With the government fiscal year. As a taxpayer, you have a right to select what? Any accounting year that you deem, that you consider it will be what? It will be suitable for your what? For your company or for your what? For your record. So it is not compulsory that what you must follow what? The government what? The government tax year or the government fiscal year. So you can select any what? Any year. But it has to be what? A period of what? 12 calendar months, which is what? The guide as what? Accounting year. So any questions so far? Any question? Any question?
Yeah.
Okay. Then after the account, another terms that we need to consider is what? Accessible profit or income. Because I'm doing a particular business, that does not stop me from investing in what? In other businesses. There is no law that says, okay, because I must not what? I must not do any other investment. Or because I'm what? I'm an employee of a company. So that means what? I must only what? Rely on what? On income from that company. No law says that. You have a right to what? To generate income from where? Various sources. So far, in as much as what? Those income are what? Are legal. So all the totality of all the income that is generated by a taxpayer, when you add up all the income generated by a taxpayer from all sources, that is, you have income from rent, you have income from trading activity, you have income from interest, you have income from dividend, you have income from royalty. When you add up all those income together for a taxpayer, the totality, the total of that income is what is called what? Accessible profit or income. You can see we have two information there. We said either accessible profit or income. Please, it's going to be accessible profit where the taxpayer is what? Is a company. Because as a company, when you prepare your record, you want to what? You want to look at whether you are making profit or loss. So that's why you have accessible profit. Where the taxpayer is an individual, what you are going to have is what? Is income. Because to an individual, what you receive from your investment is what? Is income. So depending on the taxpayer, we determine whether you are going to write it as what? Accessible profit or accessible income. I hope that is clear to us. So that is what? Accessible profit. Then the next one we have is what? Basis of taxation. Basis of taxation. How do we have said, okay, a taxpayer is expected to what? To prepare their account in relation to what? To the accounting year. So when they prepare their account in relation to the accounting year, what is the basis they are going to what? They are going to adopt to prepare this account? We have two bases that are available. You can either have what? Actual year basis. We have what is called actual year basis, which is stated as what? AYB. They call it what? AYB. You can simply call AYB, or preceding year basis, which is what? PYB. It is either you are using the basis of what? Actual year basis, AYB, or you are using the basis of what? PYB, preceding year basis. So please let us take note of that. Then when they say actual year basis, so what does it mean? As the name implies, actual. When they say something is actual, that means what? The same. The same. What that means is that that actual year basis, that is the basis period that's going to start from a particular year and also end in that same particular year. When a basis period starts from a particular year and also end in a particular year, that basis is called what? Actual year basis. That is a basis period that starts and ends in the same year. So when a basis period starts and ends in the same year, it is called what? Actual year basis. So let us illustrate that actual year basis. Please, I hope we can see my the Excel I just,
Yes, sir.
yeah, the screen. So when they say, look at it, when they say actual year basis, actual year basis now, let us, so assuming we have, let us say we have tax year. This is, we have tax year, we have basis. Assuming we have a tax year of 2021. If you are using actual year basis, that means that period must start from 2021 and also end in what? 2021, which must be what? A period of what? 12 months. That means if you are starting from 2021, that will be 1/1/2021 to the next 12 months will be when? What will be the next 12 months? If you are starting from 1st of January 2021, what day will be the next 12 months? Who can tell us?
31/12/2021.
Yeah, 31/12/2021. So if your tax year is 2022, what that implies is that you must have 1/1/2022 and end in what? 31/12/2022. If it's 2023, it must start from 1/1/2023 and end what? 31/12/2023. So that basis of you want to use must start from the same year and also end in the same year. So when you have such situation, it is called what? Actual year basis. Please let us take note of that. It is called actual year basis. So you can see examples. A good example is what we just illustrated above, actual year basis. We also have what? Preceding year basis. When they say a year is preceding, what that means is that what? Year before the tax year. That means the basis period must end in the year before the tax year. Any problem? Any problem? The basis period must end a year before the tax year. Must end a year before the tax year. The basis period must end in a year before the tax year. So that's what they mean by what? Preceding year basis. So how do we what? So what do they, if they say preceding year basis, how do we analyze the preceding year basis? Let us also use that Excel to analyze it. Assuming we are not using actual year basis now, assuming we want to use preceding year basis, it is stated as a PYB, preceding year basis, PYB. So you'll be, by the time we proceed further, we'll be using PYB as well for preceding year basis. If the tax year is what? Assuming the tax year is 2021, what that means is that the basis you are going to adopt must be what? The year end must be a year before what? This 2021. That is what they mean by what? Preceding year basis. It must be a year before what? 2021. So that means preceding year basis will be what? 1/1/2020 to 31/12/2020. So it must be what? What you have as the end of the year here, you can see 31/12/2020 must be preceding to what? To the tax year. That's what they mean by what? Preceding year basis. If you're having 2022, it must be 1/1/2021 to 31/12/2021. Assuming this particular taxpayer now is not adopting 31st December as their accounting year. Assuming, let's say, for instance, they are adopting, if they are adopting 30th, 31st March, let's say this company, this particular taxpayer is adopting 31st March as his accounting date. What that implies is that if I have 2023, what that means is that the end of this period must end. This period must end as at what? 31st, 3 year before this, which must be what? 2022. And it must start from where? From 1/4/2021. So that's what they mean by what? They mean by preceding year basis. So this is a good example of what? Of a preceding 1/4/2021 to 31. So this is another what? Another example of what? Of preceding year basis. Assuming the company adopt what? 31st March as their what? Accounting date. That accounting date, we can also call it what? Accounting period. Please let us take note of that. It can also be called accounting period. So let us take note of that. So that is for what? That is for the basis, which can either be what? Which can either be actual year or preceding year basis. Then after that, the next terms we are going to talk about is what? Basis period. Basis period. Basis period. So this one now is looking at the basis of determining assessment and tax liability of a taxpayer. How do we determine the assessment and tax liability of a taxpayer? What is the basis we are going to use to say, okay, this will be your assessment? And this basis can either be what? Actual year basis. It can either be what? Preceding year basis. Which of the basis can we use to determine what? The tax liability that will be payable by a taxpayer. And under this basis period now, we also have two categories of basis period. We have the normal basis period and the abnormal basis period. We have two categories of basis period. We have the normal basis period and the abnormal basis period. So let us take note of that. We have the normal basis period and the abnormal basis period. Looking at the first one, when they say something is normal, that means it follows what? The normal procedure, normal process. So a normal basis period is a basis period that is not more than or less than 12 months. Those are the characteristics of a normal basis period. It is a basis period that will surely be what? A 12-month period. It will not be less than or greater than 12 months. It must be what? A 12-month period. That is what? A normal basis period. Another characteristic of a normal basis period is what? It must have started immediately the previous one end. What that means is that if one is ending as at 31st December 2021, the next one must start at the next date. That is what? A normal basis period. There must not be what? A gap in between what? In between what? The basis period. That is when one is ending in December, another one must not go and start in what? In April. That is what they mean by what? A gap. No gap between what? Between the basis period. Another characteristic of a normal basis period is that it must be the only basis period of the tax period that ended what? In the year before what? The tax year. That is, there must not be what? Overlapping of basis period. That is, where one is what? One basis period must not be common to what? To two tax years. It must be what? Available in what? In one of the tax year. A good example of what? Of a normal basis period is those examples that we treated earlier. So let us go back to our Excel sheet. This Excel sheet now that we adopted earlier is a good example of what? Of a normal basis period. This is a good example of a normal basis period. Looking at it, you can see this is a period 1/1/2021 to 31st December 2021. How many months is this? Can somebody answer me? How many months is this? Hello, are we there?
12 months.
12 months. You can see this is what? A normal basis period. You can see that this one ended 31/12/2021. The next one, after 31/12/2021, the next day is supposed to be when? Who can tell us? After 31/12/2021, the next day will be what?
1/1/2022.
2022. You can see that next day is when this one started. So you can see this one started and ended in the next 12 months. So these are examples of what? Of a normal basis period. Also, this one too is also what? An example of a normal basis period. 1/1/2020 to 31/12/2020. 1/1/2021 to 31/12/2021. These two are also examples of what? Of a normal basis period. It is not compulsory. A normal basis period can either be what? Actual or preceding. It can be any of the two form. But what? It must be what? 12 months and what? It must what? There must not be gap or overlapping in what? In the basis period for it to be what? To be regarded as what? As a normal basis period. So after that, we also have what? So after the normal basis period, we also have again, we have what? Abnormal basis period. We have abnormal basis period. Abnormal basis period. And when they say something is abnormal, so that means it does not follow the right process. So an abnormal basis period, that is the basis period that will not have the characteristics of a normal basis period. It's going to be either more than 12 months or less than 12 months. That makes it to be what? Abnormal. There is also going to be what? A gap in between the basis period. There may also be what? Overlapping in between the basis period. When you have what? These characteristics in a basis period, that tells you that what? That basis period is what? Is an abnormal basis period. Now, this abnormal basis period is the basis period that gives rise to what? To tax liability most times. So abnormal basis period will occur in 3 scenarios. It's going to occur in 3 scenarios. Abnormal basis period is going to occur when there is what? Commencement of trade or business. When a company is commencing trade or business, there is going to be what? Abnormal basis period. When a company is ceasing trade or business, there is also going to be abnormal basis period. And when there is what? Change of accounting date. When there is change of accounting date, there is also going to be what? Abnormal basis period. So those are the 3 scenarios that will give rise to what? Abnormal basis period. Please let us take note of that. Those 3 scenarios will give rise to abnormal basis period. Then after those terms, the next that you also terms that we are going to talk about is you may also see when they give you information, the examiner may put in front of what? In front of that information, the examiner will write what? Period to so period. They may tell you period to 31 December 2021, period to 12 December 2022, period to 31 March 2021, period to 31 March 2022. Please, whenever you see anything period to, what that implies is that what? That information is either lesser than 12 months or more than 12 months. Please, do we take note of that? When you see anything, when in the exam, when there is period to, what that means is that that information is either lesser than 12 months or more than 12 months. That is why you have what? Period to. The information you have is what? Is either less than 12 months or more than 12 months. So that is why you have what? You have it as a period to. Please let us take note of that. Then apart from period to, you may also have what is called what? Year ended. Apart from period to, the examiner may also say year ended. You may also have what? Year ended. When they say year ended, once they say year, we have already stated earlier that what? A year is usually how many months? A year is how many months? Oh yeah, a year is how many months?
12 months.
12 months. Since a year is 12 months, so once you see year ended, what that means is that what? That information is what? Is for 12 calendar months. That is the implication of that. Anytime you see that the examiner gives you information and the examiner puts year ended there, what that means is that that information is for what? 12 calendar months. So please, do we get that? So that is for that. So after, those are the terms that we are supposed to familiarize ourselves, which we are going to be using by the time we get to what? Computation aspect. After knowing these terms, so the next thing for us is to consider this aspect under this abnormal basis period one after the other. We are going to look at aspect of commencement, we are going to look at aspect of cessation, and we are going to look at aspect of change of accounting date. Please, this topic is what? It's an important topic of what? Of our syllabus, because It can be what? Incorporated in any of the other topic. Direct in, direct out. Examiner normally set question on this topic. Please, don't let us joke with what? With this topic, please. So we are going to start with the first one, which is what? Commencement of what? Of business or commencement of trade. When you are doing a business, you can do a business either as what? As either a company or as either what? A sole proprietorship. Either as a company or either as an individual. So business what? So when you are now commencing that business, it is expected that what? You are going to be liable to what? To tax. And when there is what? When there is commencement of the business, there is a difference between what? The date of incorporation and the date of commencement. Let us take note of that. As far as taxation is concerned, what we are after is what? Is the date of commencement of business. You have no business with the date of incorporation. That means the company just incorporate their yet to commence operation. It is the date they start their operation. That's that you'll be particular about for the purpose of tax. Because what that means is that where a company is incorporated and they are yet to commence operation, that means they are yet to start any business. So they are not expected to be liable to any tax. So in the examination hall, the examiner is going to give you both the date of commencement and the date of incorporation. What you are after is the date of commencement. Please, let us take note of that. So the date of commencement is what we are going to pay cognizance to. So which is what is stated here in this paragraph. That so you should pay attention to the date of commencement and not the date of incorporation. So if I'm now commencing business now, what is the basis period that the tax authority is going to adopt to charge me to tax as either an individual or as a company, as a taxpayer? The basis of assessing a taxpayer to tax in commencement is governed by what? Either section 29 of CETA or section 24 of PITA. CETA is simply Company Income Tax Act. That is the act that governs the company tax. Why PITA? PITA. This PITA is Personal Income Tax Act. That is the tax law that governs the personal income tax, such as the payee and the direct assessment and some other taxes under for individual tax. So the basis that govern this taxation for commencement is that section of the act, which is what is applicable. And what is that section saying? That section has now specifically mentioned that the basis of assessing a company to tax should simply be on preceding year basis for commencement. The basis is strictly going to be on preceding year basis. So that means the implication of that is that means for commencement, you may actually not have anything to do with actual year basis for commencement, because the basis is strictly on preceding year basis. Then how do we now charge a taxpayer to tax? So during commencement of business. So you have to look at from the year they commence. So in the first year of assessment, how do you determine the first year of assessment? So in their first year of assessment, the basis period that will be applicable will be as follows. In the first year of assessment, first year of assessment, the basis period that to be adopted will be from the date of commencement. Listen to it now. Basis period in the first year of assessment will be from the date of commencement to their first accounting period or date. From the date of commencement to the end of their first accounting period or date. From the date of commencement to the end of accounting period or date. From the date of commencement to the end of accounting period or date. So let us use something to illustrate that. From the date of first year of commencement. For instance, let us look at let's say we are giving an information. A taxpayer, let's say we have a taxpayer commenced operation on 1st March 2020 and keeps account to 31st December annually. So the implication of this is that what? Their first year of assessment, tax year, in solving this now, tax year, we have a basis period. In solving this now, the basis period that we are going to use in the first tax year will be what? From the date of commencement. And what is the date of commencement of this taxpayer? What is the date of commencement? Oh yeah, can somebody?
2020.
1st March 2020. That would be what? 1/1/2020 to their first accounting date. And what is their accounting date? What is their first accounting date?
31/12/2020.
31st December. That will be 31st December. So we should be what? 2020. So in which the tax year will now be what? Year after this last year. Year after this what? 2020. The tax year will now be what? A year after the year of commencement, which is what? 2021. You can simply see that what? This information, this basis period is on what basis? Actual or preceding? This basis period is on what basis? Actual or preceding?
Actual year basis.
Are you sure? Look at it very well. This basis period
is preceding a year before the actual year.
Is preceding year basis. Look at it very well. The tax year is 2021. This year is what? 2020. It's preceding to what? A year before the tax year. So the tax law has specifically stated that what? Basis period must be what? On preceding year basis. So let us take note of that. So that is what? That is in the case of that. Then for the second year of assessment, for the second year of assessment, we I'm coming. I'm having some. Yeah, okay. For the second year of assessment, the basis period you are going to use to assess the taxpayer to tax will be a day after the last accounting period. A day after the last accounting period up to the next accounting period. A day after the last accounting period up to the next accounting period. A day after the last accounting period up to the next accounting period. A day after the last accounting period up to the next accounting period. A day after the last accounting period up to the next. Let us also illustration we did. So let us illustrate. We also use the last accounting period we have here is when? It's at as when? 31/12/2020. Abi? Hello, the last accounting period we have here is what? 31/12/2020.
Yes.
Is that not so? Yeah.
Yes.
The next day after this 31/12/2020 will be what date? Who can tell me? Will be what date?
1/1/2021.
1/1/2021. To the next accounting period. We already know that this company, their accounting date is what? 31st December. It will now be to the next 31/12/2021, which will be what? In the tax year will be what? 2022, which is what? Which is also on what? Preceding year basis. So Then the third year, the next year will be what? For the next year and subsequent year, in the third year and subsequent year, then it will be what? The basis period will be what? The day after what? After the last accounting period. The day after the last accounting period up to the next accounting period, and so on and so forth. The day after the last accounting period up to the next accounting period will be what? Will be for the third year of assessment. The day after the last accounting period up to the next accounting period. So let us also look at it from our Excel. So you can see the next year will now be 2023, in which the basis period will now be a day after this. What will be the day after 31/12/2021?
That'll be 1/1/2022 to 2022.
1/1/2022. We know that the accounting date of this company is 31 December to 31/12/2022. You can see it's, if you look at this basis period now, this basis period, is it normal or abnormal? Is this basis period abnormal or is it normal or abnormal?
It's normal because it's not more than less than.
Are you sure? These three basis period. Look at
the
it very
first
well.
Year, the first year is abnormal, but the next year.
No, once anyone is still the same taxpayer now. So once you have anyone that is abnormal, that means what? All these basis period are what? Fall under what? Abnormal basis period. You can see. We said earlier that what? Abnormal basis period will occur during what? Commencement of business. And during this commencement of business, before now, we usually have what is called what? Overlapping and what? And gap overlapping of basis period. That's the basis period that will be common to 2021 will also be common to 2022 and 2023 and so on. That all those information has been what? Has been abolished by what? By the Finance Act 2019. Now, there's nothing like what? Overlapping of basis period. What that implies is that what? There is no need for what? For any taxpayer to say what? You want to exercise what? Any right of election again, because what? The basis period does not what? Does not coincide again. It is simply on what? On preceding year basis. So that is how to determine the basis period in case of what? For what? For the case of what? For the case of a company that commenced business. Any question? Any questions
Yes,
so far?
Yes, sir.
Okay.
I have a question. For the actual year basis, you said that is the basis period that starts from a particular year and ends in the same year. So,
Yeah.
how about a company that the financial year end is say 31st March 20, let's say 31st March. So it means that there'll be an overlap from a previous year to the next year for it to be a total of 12 months.
Yes, there's going to be an overlapping in that such company. In that, when I was mentioned, I told you that any company, a company that is commencing business, once you are under commencement of business, you have nothing to do with what? Actual year basis. Because what? It is what? You have not, so your basis, you are going to fall under what? Under the what? Under the abnormal basis period. And the abnormal basis period, when you are commencing, it's simply what? It has been stated that it will be on what? On preceding year basis. So what that means is that when you have a company that is commencing from, let's say a company commences operation 1st of April, depending on their accounting date, will determine whether what that company information will shoot to the next year or not. If the company decides to keep their accounting date to be 31st December, that means what? Their information will not extend to the next accounting period. But where the accounting date is not 31st December, so that means what? It's going to extend to what? To the next period, in which in that situation, the accounting period is not going to be what? The same with what? with the government fiscal year. So is that clear to you?
Yes,
Hello?
sir. Yes, sir.
Yeah.
Thank you.
Yeah. Any other question? Any other question? Okay. In the absence of no question, we are going to use an illustration to illustrate this particular commencement rule. So we are going to start with question number 1 on page 3. In that material, we have a question number 1, page 3. Question number 1, page 3. I hope we all have the we can see the material. Question number 1, page 3. We have the question at Nengi Nigeria Limited. Nengi Nigeria Limited was incorporated on 1st of August 2019, but due to logistic issue, the company did not commence operation on the 1st of April 2020. The company accounting year end is 30th September annually. The following information relates to the company income statement. We are giving period to 30th September 2021, year ended 30th September 2022, year ended 30th September 2023, year ended 30th September 2024. All our information. They now say you are required to compute the assessable profit for the relevant year of assessment. So we have the solution underneath, but we're not going to adopt this solution. We are going to what? Solve it ourselves using what? Using our Excel sheet. So let us go back to our Excel. So let us go back to our Excel. Please, for any question on taxation, any question relating to taxation, there are basic things that you need to first of all state in order not to lose mark. Those basic things, one of them is what? You must state the name of the taxpayer. Number 1, name of the taxpayer. You must also state what? The requirement. All this information, stating them, will also what? Attract mark. If you don't state them, it's going to what? Lead to what? Loss of what? Valuable marks. Please, always what? State what? The name of the taxpayer and the requirement. In this information now, we have this taxpayer as what? Nengi. Nengi what? Nigeria, Abi? Nigeria Limited. That is the name of the taxpayer. Nengi Nigeria Limited. We have Nengi Nigeria Limited. We are asked to compute assessable profit for the relevant year of assessment. I don't know the year yet. I will just say computation. After that, computation of assessable profit for, if you don't know the year, you can put what? Relevant year of assessment in the exam, in the question, to be marked for you for relevant year of assessment. For relevant years of assessment. So these are the first thing as far as what you need to do as far as any question on taxation is concerned. After doing this, you have what? The tax year. We have the basis period. Then we have the assessable profit in Naira value. We are told from this question that this company was incorporated when? This company was incorporated when? 1st of August 2019. Abi? Hello? Are we there?
Sir. Yes, sir.
The company was incorporated 1st of August 2019 and they commenced when? 1st of April 2020. I made mention of this earlier that what? You have no information with what? The date of what? Incorporation. What you are after is what? The date of commencement, because that is the date that the company will start business. So the date of commencement will be from 1st of April 2020. And we already know that the accounting date of this company is what? 30th September. We have already been told that the accounting date is what? 30th September. So what that means is that what? In the first year, if they are commencing on 1st of April 2020, that means the first tax year will be what? 2021. Abi? Is that not so?
Yes, sir.
Hello?
Yes.
Yes. In which the basis period will be from the date of commencement, which is what? 1/4/2020 to their accounting date. And what is the accounting date of this company? What date is the accounting date of this company? Oh yeah, now. What date is the accounting date of this company?
I think 30th September also. I can't remember.
Yes, 30th September now. It's stated in the question. It's stated in the examiner even made it easier for us. The accounting year end. Accounting year end is 30th year end is 30th September annually. If they don't state it, just come here. You see it here, 30th September. So that means what that means is that what? That information will be to what? 30/9/20 what? 2020. 30/9/2020. This information I have now, I need to get the workings out. Working, number one. I want to know how many months is this for 2021 from 1/4/2020 to 30/9/2020. How many months is this? You can tell me how many months is this? From April to September. How many months?
6 months.
6 months. We have it as 6 months. So that means I only need information of 6 months here as the accessible profits in 2021. But if I go back to my question, going back to my question, we are giving information for period to 30th September 2021. Period to 30th September 2021 to be how much? 21. How much? To be 25 million. Period to 30th September 2021. Look at it. Period to 30th September 2021. Period to 30/9/2021 is equal to how much? 25 million. If I have this information to be equal to 25 million, what this mean? I told you that when you have period to, what does that mean? You can remind us again. When we have period to, what does it mean?
It means that is less than or more than 12 months.
Yes, that information is less than or more than 12 months. From the date of commencement, from 1/1/1/4/2020 to 30/9/2021. How many months is this 25 million? Who can analyze it for? How many months is this 25 million? In analyzing it, you don't need to stress yourself. Just split it into two. How do you split it into two? We have what? From 1/4/2020 to 31/12/2020. How many months is that? 1/4/2020 to 31/12/2020. From April to December 2020. How many months is that? Oh yeah, now April to December 2020. How many months is that? Hello?
9 months.
9 months. What happened to the I'm only hearing only one person voice. Yes, so what happened to the other people? Are they not part of the class? Hello, Mariam? Abimbola Oluwasegun. Are we in the class? Hello? I don't think they are here. Okay, let us continue. Then we have what? 9 months. That information is for what? Is for a period of 9 months. 9 months. If you also look at the one from, we have considered 1/4/2020 to 31/12/2020. We said that is what? 9 months. After this, we have what? 1/1/2021 to the date to 39/2021. From 1/1/2029 to 39/2021, how many months is that? How many months is that? 1/1/2021 to 39/2021. How many months is that?
9 months.
The same 9 months. The same 9 months. We also have the same 9 months. When you add these two, the total will give us how many months? 9 plus 9 will give us how many months? 9 plus 9 will give us what?
18 months. 18 months.
18 months. That means the total of this 25 million is 18 months. And I only needed how many months? 6 months. How do I get it? That will be 6 divided by 18 multiplied by 25 million. Multiplied by 25 million. How much did that give me? How much did it give us? Somebody should press calculator. 6 divided by 18 multiplied by 25 million. How much did it give us? Oh, yeah. How much? Oh, we don't have calculator. How much do we have? That should give us
8,333,333 naira.
Yes. That value will now be what? Will now be accessible profits in 2021. 8,333,333. That is for 2021. After 2021, we have what? 2022. 2022, basis period will now be the next day after this. After 39/2020, what will be the next day? After 39, what?
1/10/2020.
1/10/2020 to the next accounting day. What's the accounting date of this company? 39/2021. 2021. If you look at this information, how many months is this one? How many months?
12 months.
12 months. These 12 months now, we can also see it in this 25 million. Is that also? We can get it from this 25 million because this one ended period to 39/2021. This is where this one ended. It's part of this. So I need 12 months. In 2022 now, I'm giving 18 months, but I need 12 months. I will just say 12 divided by 18 multiplied by 25 million. Give me the value. So how much do we have? So that will give me 16, 666, 667. 16, 666, 667. I hope we all got that information. Hello? Do we get that value?
Yes, sir.
Yeah. After 2022, the next year will be 2023. 2023 will now be the next day after this, which is what? What? Next day after 39/2021. Maybe what?
1/10/2021.
2021 to the next accounting day, which is what?
39/2022.
How many months is this?
12 months.
12 months. If you go to our question, you will see that you are giving year ended 30th September 2022. And I told you when you see year ended, how many months is that?
12
calendar months, which is what we needed. The examiner has given us the information we needed straight away. So we don't need to stress ourselves. So we just put it there straight away as what? 15 million. We just put that information there, 15 million. After that, we have 2024, which is what? The next day after 30/9/2022, that was 1/10/2022 to what? 30/9/2023. If you go to the question again, you see that what? The examiner has provided us with what? With that one, also as what? 16 million. Abi? We have it as well. Year ended 30th September 2023. To be how much? 16 million. So that value will also be what? Will also be our information as well. 16 million. Then after that, we have what? 2025, which is what? Next day after this, 1/10/2023 to 30/9/2024. If you also go to the question, we have been given that information to be how much? How much? 30/9/2024, 15,500,000. You just take it directly as what? 15,500,000. Then after that, we have a 2026. But I cannot go to 2026. Why? Because if you look at the information given to us by the examiner, the information ended when? 30th September 2024. That means I don't have information to do the one for what? 2026 year of assessment. So I will stop at what? Where the information provided ended. So that is what? How to solve a question of comments, which is the solution we have here. This is the solution that we just solved that we have here. Please let us take note of that. So information about it is also here. So please, any question? Any question? Any question? Are we there? Any question? Hello?
No, sir.
Okay. So that is what? That is the first aspect of what? Of commencement. When we started, I made mention that what? The Finance Act has abolished what is called what? Overlapping and gap in what? In commencement. But there may be what? Existence of what? Occurrence of gap in the year of assessment during commencement. You may have a gap in your year of assessment during commencement. That is what? Occurrence of gap in the year of assessment. What do we mean by this gap? Like a company commenced what? Operation in 2020. That means what? The first tax year is supposed to be what? 2021. Instead of the first tax year to be 2021, there is going to be what? A gap. They are now going to commence in what? 2022. Why? Because what? Because of what? The scenario available. And when do you have this what? This gap? It is when what? When the accounting date comes before what? Before the commencement date. Take note of that. There may be a gap in the year of assessment upon commencement due to transition issue when the accounting date is earlier than what? Commencement date. That is when the accounting date comes before the commencement date. For instance, the accounting date happen to be March, while the commencement date is what? September. In that case, there is going to be what? A gap in the year of assessment during what? During commencement computation. So when do we, who can tell me again, when do we have gap in the year of assessment? Who can remind me? When do we have gap in the year of assessment?
When the accounting date comes before the commencement date.
Commencement date. So there is going to be what? A gap in the year of assessment during commencement. But there is no gap in basis period. You can only have gap in the year of assessment. Because of what? Because of the nature of the what? Of pumping activity. What do we mean by this gap in the year of assessment? We are going to use the next question to illustrate that, question number 3 on page. So we have question number 3 on page 6. That's what we are going to use to illustrate that. Question number 3 on page 6. So we have what Dapodi Ventures commence operation to produce sachet water nylon on 1st October 2021. The business record shows the following result. Adjusted profit, adjusted income. You can see we use income here. Who can tell me why do you think they use income and they did not use adjusted profit? Who can tell me? Why do you think they use income here instead of adjusted profit?
Because it's for an individual, not a company.
Yeah, thank you. It's an individual. It's an enterprise, an individual. So we have what? Period to 31/3/2023, year ended 31/3/2024, year ended 31/3/2025. Require compute the accessible profit for all relevant years of assessment. Compute the accessible profit for all relevant years of assessment. You can see in this question did not tell us specifically the accounting date of this company. But from the information given to us, we can know. What do we think is the accounting date of this company? Who can tell us? What is the accounting date of this company?
31st March.
Yeah, 31st March annually. 31st March annually. So that's when they have a year ended, 31st March annually. So how do we work? So let us also illustrate this. Let us solve this question. So let us solve this. We have Dapodi Ventures. We have computation of tax liabilities for, computation of accessible, we are not asked for tax liability, of accessible income for relevant year of assessment. Please, in the exam, don't go and write what I wrote to, write it in full. Don't write RYA for the examiner, write it in full. Because the examiner can call it any name, so write it in full. Then we have tax year, we have basis period, then we have what? Accessible income. Then we have what? The workings. So I'm going to bring some analysis here. Number 1, what is the date of commencement? What is the date of commencement of business? Date of commencement. Oh yeah, now let us go back to the question. What is the date of commencement? 1st October 2021. 1st October 2021. First 1/10/2021. Number 2, what is the accounting date? Accounting date happen to be what? 31st March, 31 March 3 annually. If you look at this information, you definitely see that this accounting date, March, comes before what? October. Is that not so? Hello?
Yes, sir.
Hello? Yeah. You see that March comes before October. The implication of that is that the accounting date comes before the commencement date. When you have a situation like this, on a good day, the first tax year is supposed to be which year? 2022. Abi? Is that not so? Because they commence in 1/10/2021. First tax year is supposed to be what? 2022. Is that not so?
Yes.
Yeah. But because the accounting date coming before the commencement date, there's going to be a gap. Their first tax year will now be what? 2023 instead of 2022. This will only occur when what? Accounting date is earlier than the commencement date. So let us be mindful of that. So the basis period will now be from the date of commencement, which is 1/10/2021 to 31/3/2022. You can now see it's strictly on what? Preceding year basis. It must be on what? Preceding year. If you go and put 2022 here, that means it's not going to be on preceding year basis. So it must be what? So there is going to be a gap in what? In the year of assessment, so 2023. So that means this company, now this particular taxpayer, will not be what? Liable to tax in year 2022. We will start paying tax in what? Year 2023. Assessable income. So let us now look at assess. So from 1/10/2021 to 31/3/2022, how many months is that? How many months? Oh yeah, now. How many months? Hello, how many months is that? 1/10/2021 to 31/3/2022. How many months?
6 months.
6 months. I need only 6 months. And if we go to what you are giving in the question gave us information period to 31/3/2023, 1 million. We are giving period to 31/3/2023 to be equals to 1 million. How many months is this from 1/10/2021 to 31/3/2023? How many months do we have? Who can tell us how many months do we have? Using that analysis I gave us, we did in the first one. So that means how to do it, just look at it that, okay, in 2021, you have from October, November, December, 3 months. In 2022, you have how many months? January to December. How many months is that? 12 months. 12 plus 3, how many months is that? Oh yeah, now, are we not? Are we tired? Hello? Hello?
Hello, sir.
Hello? 12 plus 3, how many months is that?
15.
15. Then in 2023, we have from January to March. How many months is that?
3 months.
3 months. 15 plus 3, that will give us what? 18 months. So that means the totality of that 1 million is 18 months. 18 months. And I only need how many months? Yeah, 6 months, Abi? So we say 6 divided by 18 multiplied by 1 million. So that will give us what? How much does it give us? 333. So it will give us 333. 333. After 2023, we have 2024. In 2024, the basis period will now be a day after this, which is what? 1/4/2022 to 31/3/2023. This information, 1/4/2022 to 31/3/2023. How many months is that? How many months is that?
12 months.
12 months. And we are giving 18 months. So we just say 12 divided by 18 multiplied by 1 million. That will give us what? How much does it give us? 666, 667. 666, 667. After that, we have what? 2025, which is what? A day after the last one, which is 1/4/2023 to 31/3/2024. If you go to the question, we have information about this straight away. We are giving info 31/3/2024 to be 380,000. So we just leave that information directly to be what? 380,000 naira. Then 2026, we have what? 1/4/2024 to 31/3/2025. We also have this information straight away. So we leave it as what? 450,000. We have the information straight away. We're going to lift it as what? 450,000. 450,000. For the next one, 2027, I don't have information. Information given to me ended 31/3/2025. So that means I cannot proceed to 2027. So I'm going to stop that information as far as what information given to me can provide. So that is how to solve question. So you can see this is the solution as well. So this is the solution on that. So which is the solution for that. So any question? Any question? Are we there? Any question?
No, sir.
Okay. Somebody said no. Okay, no question. So in the absence of no question, so that is what? For commencement. So we also have another question number 2, but the solution is also in the material. So we can as well check it, go over it and check it up. So after commencement of business, the next thing we have is what? Cessation of business or trade. 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 Cessation is when a company will permanently stop their operation. Permanent. That is, you want to stop your operation permanently. When you are stopping temporarily, that is not what? Cessation of operation because you still come back. But when you are stopping that operation permanently, you don't want to run that business again. So it's called what? Cessation of business. So that cessation of business, we also give rise, because according to the law, it is expected that business entities should run to perpetuity. That is, business is supposed to run as a going concern entity. So when you now decide to cease operation, so the tax law is also is also waiting for you to know to tax you to tax, because you have you have an obligation. So a short period of closure is not a cessation, as stated here. It should be noted that the cessation of business should not be misconstrued or misinterpreted with a short period of closure of business activity and so on and so forth. Therefore, for tax purpose, only period recognized as period of permanent stoppage will be regarded as cessation of business. What will make a company to say, okay, they want to cease their operation? What are those things? One of them is government legislation, government law. For instance, maybe you are into like those in Lagos State now, the government has banned some of this takeaway, that's foil. The takeaway that is usually like that's I've forgotten the name they call it. You know, the Lagos State government has banned that. Any company that is in Lagos that is producing that is going to affect their activity. It may lead to stoppage of their operation. Permanent debt or inability to source for raw material. When you are unable to secure raw material needed for your operation, that will also lead to cessation of business. Then loss of major market due to what? Stiff competition. The people that supply you the raw material or the market or where you supply your product to, you have lost it. It may also affect your business. Inability to settle debt when you are owing your supplier too much of money. So they can instigate what? Liquidation process against you. Loss of key personnel or technical know-how. Agreement by management. Management may also agree. Liquidity problem. There is no money. Mismanagement of fund. When they embezzle the fund of the company, it may also be need to complying with what? Order of court. The court may also say that a company should be liquidated. Failing objective when their objective is not met. It may also be as a result of what? Unforeseen circumstances, natural disaster, earthquake, flood, disaster, fire incident, and so on and so forth. So those are the reasons that may lead to a cessation of business. As you are ceasing business also, we also need to look at what? Basis period for what? Cessation of business. How do we analyze the basis period for cessation of business? Before you say you want to cease business, you must have been what? In existence as a going concern company, in which what? Your operation will have been prepared on what? On preceding year basis. You will have been preparing your account on what? On preceding year basis. So when you now decide to cease operation now, so what will now be what? The basis that will be used for cessation. So the basis period for cessation now, that is governed by what? Section 29 of 4 of CETA. For cessation of business, so the basis period will be what? A day after the last accounting period. A day after the last accounting date before cessation up to the date of cessation. A day after the last accounting date before cessation. What is the last day? Which day do you last prepare your account before you now decided that you want to cease operation? You now start from a day after that date up to the last day that you decided that you want to cease your operation. That will be what? The basis period that will be adopted for cessation of business. So where a company permanently ceases operation, Nigeria carrying on a trade or business, its assessable profit shall be from the beginning of the accounting period to the date of cessation. So the date after the last accounting period to the date of cessation will be what? Will be the basis period that will be adopted. This basis period that will be adopted now, there are rules guiding it. And it is also expected that the company must also what? We are a taxpayer. We said we have two categories of taxpayer, either a company or individual. Where it is a company, it is expected that that company must settle tax liability. They must pay the tax liability that is due on that what? On that cessation within 6 months from the date of cessation. That is, that tax liability must be settled within 6 months from the date of cessation. Failure to do that will lead to what? Inclusion of what? Penalty and interest on that what? On that amount. Where the taxpayer is a company, he has what? Within 6 months to settle what? The tax liability that is due upon cessation. Where the tax liability is an individual, he has what? Within 3 months to settle the tax liability that is due upon cessation of business. Failure to do that will lead to what? Addition of what? Penalty and interest on what? On that what? Cessation of business. And when you are ceasing your operation, you must also what? It is expected that what? You must notify the tax authority that yes, we are ceasing operation. We want to cease our operation. Tax authority, we are ceasing operation. That information must also be what? Given to what? To the relevant tax authority within what? Within 3 months of what? Of cessation of business. Failure to also do that is an offense in what? In the tax law, in the tax arena. Please let us. So that is what? How to determine what? The tax liability. forward for a taxpayer that is ceasing operation. We have some analysis that will guide us to know the due date for payment of tax as far as cessation is concerned. That is on page 8. So we have what? Illustration 1. Page 8, illustration 1. You can see PHB Nigeria make up its account to 31st December and permanently cease operation on 30th April 2020. The relevant year of assessment and the due date for payment of tax due are as follows. They ceased their operation in 2020. So that means they must have prepared their last account. Their accounting date here happened to be, they ceased operation 30th April 2020. We are going to assume that their accounting date is what? 31st December, because we are not told. So that means they must have prepared their last account as at when? 31st December 2019. Their last accounting day must have been 31st 12 2019, which is their last accounting period, accounting year, from 1/1/2019 to 31st December 2019, which is what? The year of assessment will be 2020. They now decided to cease in 2020. In that same 2020 now, from the next day after their last accounting day, which is from 1/1/2020 to the date of cessation, 30/4/2020, they are now what? Will now be what? The basis period for cessation. This period now, they have, because this particular information is for a company, PHB Nigeria Limited. So it's a company. They have what? Within 6 months. They have within 6 months to pay what? To pay that tax liability. 6 months after April will be when? 6 months after April. 6 months after April 2020 will be when? Hello? 6 months after April 2020 will be when?
October.
October. So that means what? The due date that they are supposed to pay this tax will be what? 31st October 2020. You can see. They must pay the tax for this period between what? 31st October 2020. Look at it. Why the one for this same year, 2020, but they are ceasing operation, they have what? Up to 6 months to pay what? The tax liability for this one, because this one is on what? Preceding year. But the one that relate to what? The year of assessment, it was 6 months after, which is what? 31st October 2020. So which is what? The year they have to what? Pay the tax liability. So that's what we mean by what? Depending on it, if it is what? Individual, they have 6 months. If it's a company, sorry, if it is company, they have 6 months. If it's an individual, they have 3 months to pay what? To pay the tax liability. Any question? Any question so far? Any question? Any question? Some of us are not even responding. So please, I would like us to respond so that what? We'll be able to what? To iron out anything that we don't get. Any question? Hello, any questions so far? Are we there?
Yes, sir, we are.
Any questions so far?
No, sir.
So in the absence of no question, we are going to stop the class today at this level. So we are going to continue from the second illustration in the next class, which is what? On page 8. Please let us what? Let us also go over the examples and those that were not treated. So their solution are also in the what? In the material. Please let us go over them so that what? We can familiarize ourselves with what? With the principle guiding what? Guiding the tax law. So in the absence of no further question, so I'm going to end the class now. So we are going to see. Then before I end it, so do we need me to send us the Excel, that Excel I use in doing the solution, or we don't need it?
Yes, sir, we do.
Okay, I should send the Excel, Abby. So I'm going
Yes,
to
sir.
send it to our group so that we all have this and also make use of it. So I'm going to send it to the group.